Hey, it's Randy from Funeral Funds of America. In this video, I'm going to share with you the actual pricing for $15,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 79-year-old female. Now, first thing I recommend you do is go to our website at funeralfunds.com. And then on just about every page of our website, we have these free quotes that you can use. You just select the state that you live in. We are licensed in all 50 states. Select the coverage amount, put your birthday in there, the rest of the info, click Get Quotes Now. It will take you to a page that's going to show you the best insurance companies with the lowest pricing based off your age, gender, and the state that you live in. And you'll be able to compare all the pricing from all the companies. And then you can call us at 888-862-9456, and we can help you understand what you actually qualify for. Now, one of the first things we recommend to females age 79 looking for $15,000 worth of insurance is just asking themselves, is that an appropriate amount of coverage for their final expense needs? Now, final expense needs would typically be either a cremation or a burial. So with cremation, there's two options. The first option is where you get cremated and you just come home in a cardboard box or an urn. That's typically going to run between $1,000 and $2,000, depending what part of the country you're in. And if the second option is if you're going to get cremated and have some sort of a ceremony, maybe a remembrance of life ceremony, celebration of life ceremony, that's typically going to run right around $3,500 to $4,500, again, depending what part of the country you live in. Now, as far as coverage, the cremation where you come home in the cardboard box or the urn, most people we help would get between $5,000 to $7,000. Now you might be going, well, Randy, you said cremation's $2,000. Now we're talking $5,000 insurance. What's the deal? Well, our 79-year-old female would probably like to make it to age 89, perhaps, right? And we know that things get more expensive, over time due to inflation. So what we actually do is we get a little bit more coverage than we need right now. We lock that in at the lowest, youngest rate at age 79 right now. And what that does is it inflation-proofs the plan so that if you're blessed to live a long time into the future, your family members won't have to come up with any money in the future. It also has the added benefit that if you died sooner than you thought, maybe in the first 1, 2, 3, 4, 5, 6 years, whatever that would be, there's extra money in the policy to take care of some other final expenses. Like maybe there's some medical expenses or credit card bills or something that if given the gift of time, you would have paid those off, but you died early. So it just helps take care of some of those so that the family doesn't have to worry or be burdened with those as well. Now, if you're going to have the ceremony and the cremation, most people would be looking at probably right around $7,000 to $10,000, kind of plus or minus. And again, does the same thing. Inflation proofs the plan in the long term, provides some extra money in the short term if you don't live as long as everybody hoped and prayed you would. Now, if you're going to get buried, the average cost of a burial right now in the United States is right around $10,000. So if you pretty much go to any funeral home in the United States and hand them a $10,000 check, they should be able to get that done for you. It won't be anything fancy by any means, but they should be able to. If they say no, just walk out the door, walk 2 blocks down the road to one of their competitors, and they should be able to help you out. Just understand the $10,000, that's kind of just takes care of things right now. So if you're on a fixed or limited income and that's all you can afford, go ahead and get that. That takes care of the most immediate needs, and we can always help you add more coverage. But just understand that that is not inflation proof. So with that in mind, most 79-year-old females that we help, we would help with anywhere between $10,000 to $15,000, again, plus or minus. And that's typically going to work for most gals at that age. Now, if you're going to have to have a body transported out of state or something like that, you might need to look at $20,000. But we can help you kind of understand what's going to be most suitable for your needs as far as coverage and pricing and all that stuff. We help people with that all the time. Now, one thing that does kind of happen sometimes is we'll have a 79-year-old female say, well, I know I need to get the funeral insurance, but I'd also like to leave some money behind for my kids. So what's $30,000, $40,000, $50,000 going to be? And we give them that pricing, and it's expensive. And sometimes our females will just go, well, you know what? Nah, if I can't do everything, I'm not going to do anything at all. And what that means is they're just upset with the pricing. And they shouldn't be upset with the pricing. They should be upset with the person who waited until age 79 to shop for that much insurance. That's not the insurance company's fault. That's age 79. You got a lot of water under the bridge at that point. So you should have just gotten this sooner. So what we actually recommend is, because they came in originally wanting to make sure that the final expenses were taken care of, and then the kids would be nice to do, right? So we say, why don't we do this? Why don't we take care of the final expenses now? Because we know you're going to die. There's no way getting out of that. And then what we can do in the future, if you want, is just add in a secondary policy that would go directly to the kids, and that would just be their kind of spending money or whatever that would be. So yeah, most 79-year-old females are just really pleased with that. It's kind of the best of both worlds. So, if money's not an issue, we can do it all at once. But for most folks who are on Social Security or disability, breaking it up that way is a terrific way to handle it. Now, one thing we always recommend getting is first day coverage or benefits. We do not recommend those plans with 2-year waiting periods at all. We'll get to that in a moment. But what first day coverage means is if your plan were issued and approved today and you died tomorrow, the insurance company would have to write that check for $10,000, $15,000, $20,000, $25,000, whatever it is. It's going to be the best coverage at the lowest pricing. Now, some 79-year-old females would say, well, I like that first day coverage, Randy, but I'm not in the best of health and I'm worried I may not qualify because I know they ask health questions. To which we would say, hey, that's our problem, not your problem, right? From an insurance standpoint anyway. And what we mean by that is we work with enough different insurance companies. They all ask different health questions. They all have different underwriting. And right now, we're getting around 90 to 95% of the people we help, we're getting approved for first day coverage or benefits. Really, the only reason we wouldn't be able to get you covered with first day coverage is if you just waited too long and you had some significant health issues, like maybe you had a terminal illness and you're going to pass away in the next 12 months, or maybe you had dementia, or you're on dialysis, or you are in a hospital or in a nursing home. If that were the case, we'd typically refer you out to a different insurance company. Something that also happens seemingly every week is somebody will call us up and say, hey, we had a family member pass away this last week. They didn't have any insurance. We don't have any money. The body's down at the funeral home. The funeral home director is not going to do anything until he gets paid. So we need to get this insurance really quick so we can get that money to pay the funeral home director. We have to let them know that there's no insurance company in the United States that's going to approve a policy on a dead person. You actually have to be alive to qualify for this insurance. And it's unfortunate they lost a loved one, and it's doubly unfortunate that their loved one didn't care enough about them to actually take care of this in advance. They knew they were going to die. They just didn't know when. They probably looked at this insurance and they put it off. And then one day they just went and died. And now their family members have to take care of this. And chances are they're going to have to put it on their credit card, pay 26% interest, and it's going to take them years and years to pay off. What a terrible legacy to leave behind, to burden others with something that's not their financial responsibility. Don't do that. This insurance is affordable. You can afford it. We can always help you start small. We can always help you add more coverage later. Don't leave that negative legacy behind. One thing we don't recommend, as I mentioned earlier, is those plans with 2-year waiting periods. Colonial Penn, fairly well-known company out there. I think probably just because they advertise all the time on TV, right? Those $9.95 commercials. Seems like they're playing every 7 minutes. But yeah, if you didn't know this, that $9.95 plan, that's a 2-year waiting period plan. You do not want that plan at all. If you qualify for first day coverage, you should never settle for a 2-year waiting period plan. Now, Colonial Penn, they're not the only company out there that does that. There's other companies like Mutual of Omaha, their United of Omaha product, AIG, Gerber, gosh, so many different companies that, they just offer those 2-year waiting period plans. And some of these companies have done an amazing job of convincing the American public that if you're over the age of 50, the only thing you qualify for is a plan with a 2-year waiting period, to which we always say, don't fall for such nonsense, because we help people with first day coverage all day long. Don't believe that garbage. No. Now, our 79-year-old female probably just got done watching a Colonial Penn commercial. She's probably thinking, oh my gosh, I outsmarted Colonial Penn. I'm still here at age 79, and I just watched that commercial, and it was so inspiring. I'm probably going to get $20,000, $30,000, $40,000, maybe even $50,000 for only $9.95. And then our 79-year-old female talks to a Colonial Penn agent or goes on their website like we've done for you here and looks at the pricing and sees that 1 unit of coverage which is going to be $9.95, is only going to buy $627 worth of coverage. Now, $627 is not even going to cover a basic cremation anywhere that we know of in the United States. And it wouldn't matter if it would, because it's still got that 2-year waiting period where it's not going to pay out anything in the first 2 years if you die of a health or medical reason. Why would you ever do that? Why would you ever shop for a plan just based off pricing when the coverage is so minuscule? Now, there's some people out there that say that companies offer these really low teaser rates. They're meant to tease you to get your information so they can get you into their marketing funnel. But they would say that they don't even want to sell you these plans because they're not very profitable because the coverage amount is and the premium is so little. So they say what they do is they just want to get you in their marketing funnel. And once they get you on the phone, they'll say, oh, yeah, for that low price. Oh, boy, that's hardly any coverage at all. That's not going to do any good. You're going to need more coverage. Let's look at more coverage. And then they'll upsell you to more coverage, which is massively more profitable for them. So we're not saying Colonial Penn would ever do anything like that, but some people feel differently, I guess. So you make that own determination on your own based off the fact that $9.95 is only going to get you $627. Now, this video is about $15,000. We're going to run into a challenge here with Colonial Penn because they max out at 15 units. And I know for a fact, just off basic math that we're going to fall short here. Let's take a look at this. So we're maxing out at 15 units. That's only going to get $9,405 worth of coverage. That's going to be $150. So let's do this. Let's go take a look at what first aid coverage would be and see about saving you money or getting more coverage in this case too. So $15,000 female, age 79 right there. Get quote. Let's go back and look again. Again, this is roughly $9,000 for $150. And let's take a look. I want you to see this again because I did put $15,000 up here. But this, depending on the company we go with, it's like $137. Preferred means first day coverage with this plan, as does level means first day coverage with this plan. But yeah, $137. Would you rather have $15,000 in first day coverage for $137, or would you rather get $9,405 with a 2-year waiting period and overpay at $149, roughly $150? Yeah, it makes no sense. You should not get a 2-year waiting period plan if you qualify for first day coverage, because you're going to overpay about $12 a month, which you go, oh, that's not big of a deal. But remember, it's like $6,000 less coverage, and it adds up. $12 a month times 12 months is $144, and if our 79-year-old female lives to age 89, you'll overpay around $1,440, and you'll have less coverage the whole time, and you'll get socked with that 2-year waiting period. So yeah, it makes no sense. Let us help you get first day coverage. You just need to be an educated shopper, and insurance can be confusing. We get it, but we can help you be that educated shopper. Let's look at some other pricing here. You'll be able to see all these different insurance companies yourself too. Let's see. I mean, look at these two companies, 198, 202. Same coverage amount. Why would you ever, if you could get for like right around 130, why would you pay 198, almost $200? It makes no sense. You're throwing money away. Don't do that. Let's look at like Lincoln Heritage here though. It's first day coverage, but holy guacamole, why are they so expensive, right? Well, they've got a deal where when you pass away, they will supposedly call 2 or 3 different funeral homes to get the lowest pricing for you. Maybe do a couple other things, but they don't do that for free. They charge for that. So this is basically around $203. I'm just rounding numbers up. $203 versus $137. So if you go with Lincoln Heritage over Aetna in this case, and Aetna may not be the best company based off your health or anything, but any one of these companies, you're going to end up overpaying roughly around $66 more a month. And let's do the math on that. $66 a month times 12 months, that's right around $792 more a year you'd be overpaying. If our female age 79 lives to age 89, you will have overpaid right around $7,920 on a $15,000 policy. So you got to ask yourself, is it worth overpaying an insurance company $7,920 roughly over a 10-year period to have them make 2 or 3 phone calls and maybe do a couple other things that may only take an hour or so to do. Yeah, boy, I tell you what, we never recommend giving any more money to an insurance company than you have to. That money's better off in your bank account rather than an insurance company's bank account. You're better off spending that money for you to have fun rather than give that away to an insurance company. You could do a trip, you could spend it on family, you could, get a new appliance, something like that. But yeah, do not transfer your wealth unnecessarily to an insurance company in the form of higher premiums. Let us help you get approved at the lower pricing. In fact, what we do, we recommend you get the lower pricing, and then we offer a free funeral and estate planning guide. And you can download that off our website. It's free. Once you download it, print it out. Once it's printed out, fill it out. And just write down who gets what goes where, and what you want done after you're gone. And then keep that with your insurance policy. And then when you do pass away, everything's in one place. Your family will go to that one place, and they'll know that you not only loved and protected them financially with the insurance policy, they'll know that you loved and protected them emotionally with the funeral and estate planning guide. And all they'll need to do is open that funeral and estate planning guide and start reading, and they'll know exactly what you wanted done. And they'll know that you not only loved and protected them in life, but you loved and protected them that one last time in death, exactly when they would need you the most, when you weren't here. But you provided for them well in advance. What a wonderful legacy to leave behind. If you want to leave a legacy like that, reach out to us at Funeral Funds of America. And a special quote just for our YouTube visitors. It's going to be funeralfunds.com/YouTube. And you'll be able to see the best insurance companies at the lowest rates with the most discounts. Take full advantage of that. You'll be able to see all the pricing. And then give us a call at 888-862-9456, and we can help you understand what you qualify for. So if you have an existing insurance policy and you want us to price shop it to see if we can get you lower pricing, or if you want to add coverage to that, we can help you out with that. If you're looking for brand new coverage, or you want to just understand what you qualify for or what might be most appropriate, we can help you out with that. So we look forward to getting you the most amount of insurance for the least amount of money. We will be blessed to help you with this at some point in the future. Until that day comes, you stay safe, you take care, you have a nice day. Bye-bye.